Assalamualaikum warahmatullahi wabarakatuh. I'm from KME1 Group 7. Will explain a little bit about capital structure. This is my group member, Muhammad Yasir, Muhammad Fauzi, and I, Muhammad Shakir. Assalamualaikum warahmatullahi wabarakatuh. My name Muhammad Shakir bin Muhammad Nazri, metric number 1191193142. I will explain about what is a capital structure and how capital structure of the firm is measured. Capital structure is the amount of debt and equity used by a company to fund its operation and finance its asset. A debt to equity or debt to capital ratio is a measure of a company financial structure. Equity capital is derived from a company ownership share as well as claims on future cash flows and earnings. Debt comes in the form of bond issue or loans, while equity may come in the form of common stock, preferred stock, or retained earnings. Both are used to fund business operations, capital expenditure, acquisition, and other investment. When deciding whether to finance operation with debt or equity, companies must make compromise and management must balance the two to establish the best capital structure.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Fauzi bin Atri. My metric number is 1190809. Okay, now I will continue the presentation about question number 2, which is how much is debt level of Sharia compliant firms on average during the period of analysis. For this question, we already calculated the amount of debt for all four companies from 2015 to 2019. First of all is Gamuda. Gamuda Berhad has recorded an average debt of 0.41 out of all its capital, which is the lowest among the four companies. For Benelec, they recorded 0.49 for average debt. Meanwhile, for Binapuri Holdings Berhad, they recorded 0.80, which is the second highest. For the highest average debt is IJM Corporation Berhad, which is recorded 0.86 in 5 years during this period analysis. Okay, for the next question, which firm possesses a higher debt level on average during the period of analysis. For the higher debt level in terms of average in 5 years, as I said just now, that IJM Corporation Berhad had the highest average of debt, which is 0.86. In 5 years from 2015 to 2019, IJM Corporation Berhad and Binapuri Holdings Berhad, they are dominating the graph with the higher debt ratio in every year. In 2015, 2016 and 2019, IJM Corporation Berhad recorded the highest debt ratio. Meanwhile, Binapuri Holding Berhad recorded the highest debt ratio in 2017 and 2018. Meanwhile, for Benelec and Gamuda, they recorded the moderate amount, which around 15% for every year. So I think that's all from me. Thank you.
Next, we go to how is the filtering process adopted by Securities Commission in Malaysia to identify which stocks are Syariah or Syariah non-compliant in Bursa Malaysia. The Securities Commission's filtering approach includes quantitative and qualitative method. The quantitative method will show how much acceptable and banned activities contribute to group turnover and profit before tax. It examines the stock commission activities and financial ratio benchmark to see whether it is acceptable. For qualitative, Sharia Advisory Council (SAC) consider extra prohibited and haram component must be minor compared to primary business line. Lastly, business fundamental activities are essential and regarded as maslahah for Muslim Ummah.
Bismillahirrahmanirrahim. My name is Muhammad Yasir. My mobile number is 11080. So today I would like to talk about factors that contribute to firm capital structure strategy. So there are two types of the factors that contribute to the firm capital structure strategy. First is internal factor, and the second the external factor. So first, the external factor is inflation, gross domestic production, or GDP, development of the banking sector. Inflation rate inflation is expected to be the negative impact of the both debt and the stock market. As a result, the return of rate of the return is expected to be high, lowering the pricing of the security. Gross domestic rate discover that there are negative relation between the GDP and the total debt and short-term debt. Then the development of the banking, so the product market index, legal system index, no state capital structure index, and the percent index are found to be negatively correlated in the direction in the study. For the internal factor, cost of the capital, cash flow or ability of the company, financial leverage. So for the cost of capital, the demand the higher rate of the interest from the shareholder affect the cost of the capital. Then the cash flow ability of the company, company external coverage ratio may be high but lack the sufficient cash within the pay interest of the requested dividend. As a result, the company may become the financial. Lastly, the financial leverage. That's all for me. Thank you.